Welcome. We'll get started shortly. Before we begin, here's how to earn continuing professional education credit for attending this session. There are no polling questions or attendance checks. Instead, you will demonstrate your knowledge by taking a brief multiple-choice quiz using the Earmark app. Visit earmark.app in your web browser. You can also download the mobile app by scanning the QR code on the screen. Log in, or if you're new, create your free account. Be sure to use a valid email address because that's where we'll send your course completion certificates. From the home screen, scroll down to find the course. You can also tap the magnifying glass icon to search for the course. Tap on the course artwork, then the Enroll button. On the Course tab, you'll find the recording and quiz questions. Complete the quiz to earn your CPE certificate. It takes us a few days to create the course on the app, so if you are attending this session live, please wait a few days. We'll email you a link to the course when it is ready. If you have questions or need help, email us at support@earmarkcpe.com. And now, on to the event.
Hi, everyone. I'm Zach from Earmark, and I'd like to welcome you to Maximize Your Savings, 12 Essential Strategies for Ministers. And I'm going to hand it over to your instructor for today, Bill Davidson. Bill, take it away.
Thank you, Zach. Hi. Welcome, everyone, to this webinar today, Maximize Your Savings, 12 Essential Strategies for Ministers. Perhaps your interest in joining me today is with regard to tax planning for ministers and the unique and sometimes contradictory tax regulations involved with ministers and clergy. So I'm glad that you're here. Let me say a word about myself. Again, I'm Bill Davidson. I'm an ordained minister myself, served congregations as pastor, also an experienced tax manager. Have been working with clergy tax matters now for something over 35 years. Part of my volunteer work is with the local VITA program, which I hope you participate in as well. And you see listed there the other professional opportunities I've taken advantage of. And my company is Clergy Tax Consulting for Tax Professionals, and I'll say a few words about that at the end, and if I can be of further help to you beyond this webinar itself. We'll share this disclaimer. The information in this webinar is up to date as of the date it is being recorded. And I'm not a lawyer. I don't provide legal services. And so we recommend that you consult a tax attorney for legal advice when required. Having said that, let's try to maximize savings for clergy clients here with 12 essential strategies. I want to propose we share together on these 6 topics. Dual taxation that ministers are under with regard to the IRS. Ministers enjoy the housing allowance benefit. We'll talk about ministerial earnings, then ministerial business expenses, then ministerial income, and then finally paying tax on ministerial earnings. So to get started, let me introduce you to Reverend John W. Asbury, and he comes to your office and he seeks your assistance in planning to save money on his taxes. He has not elected to be exempt from self-employment tax. And so he shares with you then these following goals that he would like you to help him with in terms of his own tax planning. He wants to keep current on tax obligations, and you see the Mr. Tax there. I appreciate David Parkin's permission to use his illustration there from The Economist magazine. He wants to minimize income tax and minimize self-employment tax and take advantage of every possible tax benefit available to ministers. And so he's anxious to hear from you how you can help him. So let's talk about these first 2 topics then by way of introduction. The fact that ministers are under dual taxation. We'll talk about that a bit in a second. And as well as the housing allowance benefit. This is all with regard to U.S. tax law for ministers. So ministers are different with regard to income tax, self-employment tax, taxation in general. They're under dual taxation. There is no withholding for income tax or self-employment tax for some obvious reasons in this regard. And then there is the housing allowance benefit. So ministers are different in those ways. With regard to dual taxation, that has to do with income tax and Social Security, Medicare taxes. For income tax, ministers are considered employees with the W-2 income they receive from their employing congregation. And they're exempt from withholding. With regard to Social Security, Medicare taxes, ministers are considered self-employed for the income they receive from their employing congregations. So there's a bit of contradiction and confusion already. And then finally, on this slide, the housing allowance benefit related to income tax and Social Security and Medicare taxes. The housing allowance benefit is excluded from income for income tax, but it is included in earnings for Social Security and Medicare. So we kind of lay the groundwork there for the ways in which ministers are different as defined by the U.S. tax law for tax purposes. So let's continue with the dual taxation topic. With regard to income tax, then, a minister's salary is considered wages subject to income tax. And with regard to Social Security, Medicare taxes, ministers, as I've said, are self-employed for Social Security and Medicare tax purposes. Therefore, right, ministers do not pay FICA tax. They pay SECA tax. And there is no, ministers are exempt from withholding. Let's look at that in a little detail with the tax guide, 501c3 tax guide, where it states that withholding income tax for ministers, unlike other exempt organizations or businesses, a church is not required to withhold income tax for compensation that it pays to its duly ordained, commissioned, or licensed ministers for performing services in the exercise of ministry. However, an employee minister may enter into a voluntary withholding agreement with the church if they would prefer to, the minister would prefer to do that rather than pay self-employment tax, estimated taxes on their own. And we'll look at more detail in that in a while. Also, with regard to no withholding, the general instructions from W-2 are helpful. Under clergy and religious workers, for certain members of clergy and religious workers that are not subject to self-employment tax, boxes 3 and 5 should be left blank. You may include the parsonage or utilities allowance, the housing allowance in box 14. And for more information, there's those references there in that regard. So speaking of that W-2, here is the W-2 for Reverend John W. Asbury, presented to him for the year. And I failed to edit this, but this webinar is updated for 2024. So this should be a 2024 W-2 as an example. First, UMC, his congregation presents him this W-2 for 2024. And what do you notice is different about it? There's lots of blanks in it. So there's no withholding for federal income tax on box 2 and no state income tax withholding for, in his case, the state of Virginia in box 17. So the church does not withhold for income tax. You notice the FICA tax boxes 4 and 6 are blank. The church doesn't withhold the employees portion. And as you might expect, the church does not pay the employer's portion of Social Security and Medicare tax because it's self-employment tax that the pastor pays rather than FICA. So that's what the W-2 looks like for a minister. If you've never seen one before, you'll notice how unusual it looks, and that's the explanation for that, for all those blanks in there. It's perfectly fine and in order and appropriately completed by the church for him. So we discussed dual taxation. Let's now talk some more in more detail about the housing allowance benefit. The housing allowance is a tax benefit for clergy. For ministers in this regard, with regard to the housing allowance, there is good news and there is bad news. The good news has to do with income tax. The bad news has to do with Social Security and Medicare taxes. For income tax, the housing allowance is excluded from income. Yay, don't have to pay income tax on that housing allowance if it's appropriately set up and documented, et cetera, which we'll talk about in a bit. The bad news is the housing allowance is included in earnings. So the 15.3% self-employment tax must be paid by the minister on that housing allowance. And that gets us then to the first tax strategy I want to share with you. Taking full advantage of this housing allowance benefit significantly lowers tax liability. So the housing allowance is important to understand in order to help your clients take advantage of this and the proper planning for their taxation. So let's talk some more then about this key and confusing terminology with regard to the taxation of ministers of the housing allowance. As we said, it's an exclusion from income for income tax, not for self-employment tax, but from income tax. So that housing allowance then has some limitations to it. It cannot be more than reasonable compensation for the minister's services. The minister's employing organization must designate the housing allowance as such before actually paying it to the minister. And that amount is the lesser of the fair rental value of the home furnished plus utilities. In other words, the fair rental value of a furnished home plus utilities, or the amount spent by the clergy to provide the home. So let's share a specific example here. So let's assume Pastor John's housing allowance is $30,000. How was this housing allowance calculated in his conversation with his congregation, his finance leaders? Well, it is the fair rental value of the home furnished. So if the home that he's in was rented furnished, it's the fair rental value of that plus the utilities that he pays. And the housing allowance is calculated also on the basis of how much is spent and the church's governing body adopting a timely resolution setting that amount. So in this case, we're assuming, it usually never is the case, but for simplification purposes, we're assuming that the $30,000 amount is the fair rental value furnished plus utilities. It also happens to be exactly the amount he spent and also the amount that the governing body adopts as a resolution in a timely way. Now, how did he come up with that calculation for the fair rental value? He contacted a local realtor, perhaps a church member, right? And who identified the cost of the rent for furnished homes comparable to his own in the neighborhood. And then he added his cost of utilities. And then importantly, he has this housing allowance calculation in his paperwork, as well as that resolution, the housing allowance designation, in his own personal tax file for documentation purposes, in case he needs to have some further discussion with the IRS with regard to his tax return. So speaking of Pastor John's 24 return, now here's the 2024 W-2, right? So let's look at his. So you notice his wages, $23,629 in box 1. And there is appropriately listed the housing allowance in box 14 as instructed of $30,000. We'll also notice on this W-2, we've got $129 premium beyond the $50,000 coverage, and personal pension contribution of $900. And we'll use these numbers then in this example as we try to get our head around how this works. So let's start with the basis of Pastor John's salary of $54,400. $30,000 of housing expenses. So let's look at that box. So this is his housing allowance that's approved by the governing body, and it's based on monthly rent of $2,200 a month, which is $26,400, plus $3,000 in utilities, and $600 of other, including furnishings if he buys a sofa or repairs something in home that he owns himself, other maintenance items, etc. And this is the exact amount that in 2024, that should say, of his expenses. So $30,000 is then his housing allowance in this calculation. So based on his salary of $54,400, of which $54,400 of cash income that he receives, and then $30,000 of that being designated by his church as housing allowance, he has an income tax on income of $23,629. How did we get there? Well, the housing allowance is excluded. So he has a $54,400 cash salary, plus that group life insurance premium that's for coverage above the $50,000, less the personal pension payments, and then excluding the $30,000 housing allowance, we arrived then at W-2 box 1 income of $23,629. Quickly, the federal income tax for 2024 is $524, state of Virginia, $391. And then we can calculate the self-employment tax where the housing allowance is included. The earnings for self-employment tax for Pastor John is $53,629, calculated in the lower left where the housing allowance is included. You start with the $26,629 W-2 box 1 amount. You include then that $30,000 housing allowance. So self-employment tax earnings then are $53,629 for self-employment tax of $7,578 with a total tax due of $84.92 plus considerable estimated tax penalties if he had not been making timely contributions through the estimated tax payment process. And let me just say a word quickly. Many ministers are surprised by this, particularly newer clergy. They're just coming from secular employment. They're not aware there's no withholding, and they get surprised. And so part of your job, of course, is to help them navigate that. So here's the details of Pastor John then living in a home provided by his church. The previous example was he rented or purchased his own home. In this example, the church provides a home for him called the parsonage in this denomination he's a part of. So to make this comparison apples to apples, the cash salary he receives in this case then is $39,400. The way the previous congregation, the other congregation did it, they had an additional $15,000 of cash for housing. But since the housing is provided by this congregation, then they need not pay him the $15,000 in cash. So his cash salary then in this case with housing provided is $39,400. Now his housing expenses, he's not paying rent, right? So his housing expenses are $3,600. And you see in the box there, that's the $3,000 utilities and the $600 other without the rental payments. And then the fair rental value of the parsonage provided to him is that $26,400. So he owes the following in taxes then based on basically the same financial arrangement, but this time with housing provided rather than with $15,000 of cash housing stipend paid. So for income tax, now the income is $35,029. Where did that come from? Well, again, the housing allowance is excluded. So we begin with a $39,400 salary, add back in the $129 group life insurance premium, exclude the deduct the $900 personal pension payment, and exclude that $3,600 housing allowance that was approved for his utilities and other things. And that gets us to $35,029. And there's the income tax on that. Now, self-employment tax is on earnings of $65,029, where in the lower left there, we include the housing allowance, which was approved and he spent of $3,600. Now, for self-employment tax purposes, if a minister lives in a home provided by the church, then for self-employment tax purposes, that fair rental value must be included. And so we arrived then at $65,029 of earnings for self-employment tax. And that's the self-employment tax for a total tax due with housing provided of $11,248. Now, I've been asked a question from time to time. For ministers who live in a home provided by the church, the fair rental value of the home, and in this case, $26,400, and the amount designated and spent on utilities, which in his case was $3,600, are both excluded from income for income tax purposes and included in earnings for self-employment tax purposes. So Pastor John wonders, does the IRS really allow me to exclude from income the amount I spent on housing since the fair rental value of the home is already excluded? Well, for ministers living in a home, here's that reference in IRS publication 517. So his housing allowance is $3,600 based on the utilities and other there. I just provide that reference as folks have been asking questions about that. And then does the IRS really allow Pastor John to exclude from income the amount he spent on housing since the fair rental value of the home is already excluded? And there's that reference there with that revenue ruling, just to give you the documentation of the proper way that we're reporting those things. Now, quickly, as a part of your tax planning, the earned income credit, of course, may become a topic. So is the housing allowance also excluded for earned income credit? And you go to the IRS military and clergy rules for the earned income tax credit, and I'll just zip through this. For military and clergy that have provided housing, you see the last sentence there. The rental value of the home is the money the church would get if they charge you rent. And you must include that as well right under the third line from the bottom, you should include the rental value of the home or furnishing or housing allowance as part of your earned income from self-employment for earned income tax credit. So that needs to be, the housing allowance then is not excluded, unfortunately, when calculating the income for earned income credit. Well, Pastor John is self-employed, and you might, as a part of the confusion, right? Self-employment tax is usually Schedule C. So what about Schedule C if he's considered self-employed for Social Security and Medicare taxation? Well, as you may have noticed, earnings from the employer that goes on Schedule SE That's where a minister's self-employment earnings from his employer congregation are reported. They're not reported on Schedule C. They're reported on Schedule SE, excuse me. And the minister, and we'll say more about this in a little bit, can also deduct from these earnings any unreimbursed expenses directly related to that activity for self-employment. We'll go over that a bit more in a minute. So with regard to earnings from the employer, reporting on Schedule SE for the required self-employment tax responsibility for that compensation. Now, additional ministerial earnings beyond the W-2 income from the employing congregation, those are reported, of course, on Schedule C. Activities such as performing weddings or leading funerals, honoraria are often provided to ministers over and above what the minister receives as a salary from the congregation. That's paid directly to him. That's self-employment tax to Pastor John, self-employed income for Pastor John's business, right, as a minister. And then from this income, you may also deduct from these earnings any expenses directly related to this activity, but it must be reduced by the portion of tax-free income for income tax. I'll go into that confusing thing in a bit. So let's talk directly then about calculating and designating that housing allowance. What housing expenses are included when computing the housing allowance exclusion? Well, here's a list of a few. A down payment on a home, payments on a mortgage loan to purchase or improve the home, real estate taxes, property insurance, structural repairs and remodeling, homeowners association dues, utilities, internet expenses, to the extent in the footnote that the tax courts characterize internet expenses as utility expenses in an unrelated matter, and you'll want to consult that in terms of your own advice to your clients, whether internet expenses for that reason are deductible, included as a allowable expense for housing allowance. Furnishings and appliances, purchase and repair, maintenance items, household cleansers, light bulbs, pest control, etc. And the footnote there is to Richard Hammer's 2024 Church and Clergy Tax Guide, published by Christianity Today. It's a pretty standard text, 600-700 pages, updated every year. It's an exceptional guide if you have questions, and I'll reference that at the end in the bibliography. So estimating and valuing the amount of that housing allowance, how do you document that for the minister's tax file, in case the IRS would like to talk with him about that after the tax return is filed? Well, ideally, a signed letter of opinion of a real estate professional, the fair market value furnished, would be great. And to that, add the past 12 months of actual cost of utilities, then limit the amount to the total estimated expenditures for the housing for that time period. And it must be designated in advance of the minister's receipt of compensation and appropriately recorded by the church governing body. In the absence, in the absence of a signed letter of opinion, one could, as I've done a number of times, see if a real estate agent can provide a fair rental value of like homes in a community, and then add a value for the furnishings. And there's more detail on how to approach this in Richard Hammer's book, as well as other resources, and I won't go into them in much detail here. So let's talk about then the housing allowance designation. That that housing allowance designation can be named listed, included in an employment contract or in minutes of a resolution that the church adopts, or in its budget, or in any other appropriate instrument evidencing that official action. That's from the tax court memorandum there that I refer there, just to be a little clearer on what qualifies as an appropriate designation of an amount by the church's governing body. Now, that housing allowance must be reasonable. It cannot be more than reasonable compensation for the minister's services. So we go to the standard reasonable compensation definition in section 4958 of the tax code. The value of services in the amount that would ordinarily be paid for like services by like enterprises under like circumstances. And of course, if one violates that, if the housing allowance is compensation is set as at an unreasonable amount, any violation of that could potentially result in excise tax at 25% of the amount that exceeds the fair rental value, fair market value of the services. And it could also be 200% for the pastor if not appropriately resolved in a timely manner. The church could lose its church's tax exempt status. And for the board members that approve such an arrangement, there could be an excise tax of 10% on them as well. So we need to make sure that's a reasonable estimate there. Now here's references for housing allowance designations, as well as housing allowance expense reports with those page numbers there in his book. And as I've worked with ministers, referring to the financial office of the judicatory of the minister's particular denomination or religious organization is a good place to go as well for some of those guidelines and guidance. I worked with a Lutheran congregation not too long ago, and went to their judicatory and found at their website a wealth of information right along this line. It was very helpful to them and very appropriate for their particular denomination. So you may find some help in that regard as well there. So Pastor John has another question. He asked, I own my own home, and if I buy a home and exclude the housing allowance appropriately for income tax purposes, what about my mortgage interest? I've already, excluded the mortgage interest since I use my mortgage payment as a part of the qualifying expense for the housing allowance. Well, your answer is, as this young man says, yes. And that's if, and this is the Code 265. Basically, it says for military and ministers that no deduction is denied for interest or real property taxes on anything that's excluded for parsonage allowance under Section 107. So that means basically this is a double deduction benefit then for a minister. A minister can use the mortgage payment in full as a qualifying expense for the housing exclusion amount, the housing allowance designation, and can also then on Schedule A report the mortgage interest and property taxes as an itemized deduction. Now, of course, the Tax Cut and Job Act limits through 2025 the amount financed, as well as raise the standard deduction. So obviously the minister's itemized deductions must exceed that standard in order to take advantage of this. But if that act sunsets, then there may be additional opportunity for this in that regard. Now, another possible benefit of that increased standard deduction, which is going to be with us for another couple of years, many ministers tithe their income or charitable contribution, and they prepay charitable contribution for the following year to take full advantage of that. And I'm sure you're familiar with that with other persons taking advantage. Let's use this example quickly, comparing 2023 and 2024. 2023 itemized deduction, $14,000. And in that year, you pay $5,400 of charitable contributions, say, for a total of $19,400. So the first column is 2023. The standard deduction is $13,850. Itemized deductions of $14,000. I apologize. In the other one, the $14,000 was the itemized deductions. So in 23, if one would take the deductions without prepaying 2025 contributions, then the deduction would be $14,000. And in 2024, so the standard deduction in 23 would be 14, since he's not prepaying that 5,400 is itemized, and then under 24, the standard deduction is 14,600. So for those 2 years, the deductions total $28,600. However, the bottom line there, if he prepays 2025 contributions in 2024, you see, the standard deduction in 23 using those years is $13,850. And then in 2024, he uses his $14,000 itemized deduction plus that $5,400 additional contribution. And so that totals then $33,250 for both years versus $28,600. I'm sure you're familiar with that, but tax strategy here, number 2 then. A minister may realize increased deduction by fully deducting mortgage interest and property taxes through that double deduction, and by prepaying the annual charitable contribution to take best advantage of that increased standard deduction, at least until if it may sunset and not be available after 2025. Now let's consider what if opportunities, options, questions. What if you notice in his paperwork that Pastor John's governing body did not adopt a housing allowance until March the 1st of 2024? It must be designated before the clergy can take it. How does it affect your calculation of the housing exclusion for his tax return for that year? Well, since it is not approved until March the 1st, basically the annual amount adopted on March 1st is reduced proportionately. So it says on March 1st for the tax year 2024, the amount is $30,000. Well, it's not approved till March 1st, so that gets prorated. And quickly looking at this then, if he's renting or owning his own home, the original was $30,000 that was timely adopted. However, it's the 2024 amount of 30 was only adopted late. It was adopted late on March the 1st, leaving 10/12 of it. So working this for income tax and self-employment tax for the comparison, you add in the group life and take out the personal pension. And in this case, when it's adopted on March the 1st, 2 months late, then you can only include the $25,000 of that year's worth because it was adopted 2 months late, leaving that box 1 difference in the income for income tax. And then you, of course, expect self-employment tax to be the same since the housing allowance is already included in there anyway. And then quickly in a parsonage with the untimely designation of the housing allowance, it's going to be $3,000 instead of $3,600, reducing it. So you add the group life, subtract the personal pension, and then you can only subtract exclude $3,000 for the income tax, leaving a higher box 1 W-2, and then the same amount as we expect for self-employment tax. Now, what if you notice in his paperwork that he rents his home and he's only spent $25,000 on housing expenses, which is less than the $30,000 approved and the fair road value of the home furnished plus utilities? So what will you share with him? How does this affect it? Well, as you Can imagine then it reduces the amount of the exclusion available to him. So he only gets 25 because that's all he spent. And that $5,000 is added back in the income tax return as additional income for the unspent housing allowance, assuming that the church still reported that $30,000 on the W-2, excluding it from W-2 box 1. So there's the $25,000. So similarly as the other slide, his box 1 W-2 income is $5,000 higher because he's required then to report that extra income himself on his tax return as excess housing allowance. And then the housing exclusion is included there for income tax purposes, self-employment tax purposes. What if you notice in his paperwork that Pastor John has no documentation whatsoever of his housing allowance? Well, as you might expect, you regret to inform him that none of his expenses are excludable for income tax because it was not designated, and you are going to help him figure that out real fast. Now, what if you notice also that Pastor John's W-2 reports a salary that appears to be excessive, as we kind of discussed with the housing allowance earlier, and you wonder if this may constitute compensation that's not reasonable for minister services. And he also happens to mention that he really is proud of that 22 Cadillac that the church allows him to use for free, and you don't find any records at all in his of business and personal use documentation, and you confirm that that benefit is not included in the W-2. How do you advise your client? Well, of course, we go back to those warn him and the church and the board members who arranged for that of the potential penalties for unreasonable compensation. And you guide them, if you have the opportunity, to determine what compensation is reasonable. A standard approach in this regard is comparing salary to other similar congregations, or look at churchsalary.com. Christianity Today publishes that annually, and many depend on that to set that. Or you can seek a written opinion from a tax attorney to cover that base in that regard. And then with regard to the vehicle, confirm that there are no unreported or unaccountable benefits, such as a free use of a vehicle, and then offer your tax planning recommendations accordingly. So with regard to this housing allowance, the key question to tax planning is asking the minister, preparing for the minister, how much will you spend on housing expenses, and will you have documentation for it? So we spent a lot of time now talking about the first two topics, dual taxation and the housing allowance benefit. Let's now get into ministerial earnings. Income with respect to services performed in the exercise of ministry. And you see noted there the IRS Minister's Audit Techniques Guide. This is the 2009 document that the IRS published to give to agents. And they follow this in terms of auditing or examining ministers' income tax returns. And so it's helpful, and I share this with you in terms of your own advising your client in terms of their own tax planning. So income is salary from the employing church, reported on W-2, and that, of course, is W-2 income as an employee. And then fees paid directly from parishioners or other persons. That's reported on Schedule C, self-employment income for his business as a minister. Includes weddings, funerals, baptisms, masses, or other contributions received for such services. So those are the two large categories then for income. Let's share some more details. There's often questions, particularly in churches, whether something paid to a pastor is income compensation or not. Well, income respect to services performed in the exercise of ministry are bonuses, Christmas, especially special occasion, retirement, or love gifts, and we'll say some more about that in a little bit. The portion of a minister's Social Security tax paid by a church. Some churches realize that minister pays self-employment tax, so the church is not obligated then to pay the employer's portion. So some churches then put that calculation into the compensation, label it as that. But of course, that's compensation for the minister. Personal use of a church-provided car, purchase of a church property for less than fair market value, any rental income, any interest income, some forms of pension income, forgiven debts, severance pay, embezzled funds, obviously, and non-accountable reimbursements of a minister's business expenses, and a free trip for hosting a group with a travel agency is compensation, taxable income. Some reimbursements of a spouse's travel, it's not taxable if the spouse's travel expenses meet the following requirements. Ordinarily it is. But if the spouse is an employee, if the employer has not treated such amounts as compensation for the spouse, and the spouse's presence on the trip is for legitimate business purposes. Excuse me. Then, interestingly, a church-paid trip to the Holy Land is compensation if it is provided for either of the following reasons: to honor the minister for faithful service or to enhance or enrich the minister's ministry. And you see the references there in that regard. Now let's speak more specifically then about gifts for the minister. The tax code excludes gifts from taxable income in 102, and it defines taxable income there. This means that any love gift provided a minister, whether from an individual or from a church, is taxable income if the transferor's intent was to more fully compensate the pastor for services rendered. That's kind of a key designation there. So we need to talk about whether it's a gift or whether it's compensation. So this tax court decision here, it's a gift in a statutory sense if it proceeds from a detached and disinterested generosity out of affection, respect, admiration, or charity. It is not a gift if the payment proceeds primarily from constraining force of any moral legal duty or from incentive of anticipated benefit, or where the payment is in return for services rendered. Simply put that there for your reference. Also for your reference, tax court Felton versus Commissioner clarified 4 factors in distinguishing taxable payments from gifts, and you see those 4 items there, which I won't dwell on. Let's concentrate a bit on then what is compensation and not gifts. An example here is 4 special Sundays each year. A church organized a transfer of cash to the minister where the contributions were given out of desire to reward the minister and encourage the ministers to remain as their pastor. That's compensation. That's not a gift. Another example of compensation that is not a gift is special days designated for gifts to the pastor where it's known that the minister could not stay given the low salary without additional payments. Further example of compensation, not gifts. Gifts funded through contributions to the church where the donation is deductible. A Christmas bonus paid out of church funds by board action. An annual Christmas offering that's given to the church every year, given to the pastor every year, that's compensation. Now let's talk about gifts that are not considered compensation, not taxable. A cash or check paid directly to a minister by a parishioner, obviously. Checks made payable to the minister but collected by the church without tax deduction to the minister, that's a gift. It's not compensation. That leads us finally then to the third tax strategy. A minister and his church employer must be fully informed as to the proper administration of gifts to the minister from members of the congregation to properly plan for those in terms of taxation. Now, in this one slide, let's quickly mention to maximize pre-tax benefits, obviously, which is one of the things that obviously comes to your mind in tax planning for anyone, but as well as clergy. The personal medical insurance payments, of course, withheld, and then personal pension plan contributions designated as salary reduction based on your, and then based on your tax planning, he decides to increase his contribution, which you noticed before, from $900 to $1,800. He's going to, based on your advice, increase it by $900 in that particular tax year. Strategy number 4, take full advantage of these arrangements and in terms of saving on taxes as well as adding to retirement savings. So we've discussed ministerial earnings. Let's look at the 4th topic now. Business expenses. Business expenses for clergy, specific to ministers. And often ministers confuse dues versus contributions. Dues are business expense, contributions are not. What is deductible as a business expense is a small annual renewal fee to maintain credentials. What is not deductible is obviously a contribution to the church. Specific to ministers in terms of supplies and publications, a minister might incur some out-of-pocket costs for office supplies. That's all appropriate. Personal use should be determined, obviously, as for anyone else. And in other expenses, a minister has special vestments often. I got a ton of questions. My church requires me to wear a suit to be professional. Can I include a suit as a business expense? Well, the answer is no. Only the special vestments, etc., qualify for that. And then specifically unreimbursed long-distance phone calls, and then with regard to the cell phone use, the business percentage, etc., as I'm sure you all do for other business persons as well. So this leads us then, the big topic, obviously, under business expenses is the accountable reimbursement plan. I've provided this helpful thing with a video link from the IRS in that regard. So by your good advice, let's say you've guided Pastor John to have an accountable reimbursement plan arrangement with his congregation with those items in the amount of $5,000. And we'll see the effect of these things here in a moment. So strategy number 5 is that accountable business expense reimbursement plan. Try to get as much of that in that as you possibly reasonably can calculate and anticipate. You could also advise him that 22 Cadillac that he is used for free, which wasn't appropriately reported. Well, you can avoid all that if it's kept on the church's premises. The church has a written policy that prohibits personal use. The minister using the car does not live on the church's premises, and the church reasonably believes the vehicle is not used for any personal use, and the church does not report that. If all of that is true, then the church does not report the use of the vehicle as income to the pastor. So be aware of that to relieve the pastor of burdensome documentation in order to avoid taxation on that by the appropriate deduction of business expenses. Now, generally, ministers qualifying business expenses, and I give those references there where you can find that information. Reimbursed expenses through an accountable plan. So if Pastor John's governing body adopted such a thing, such an arrangement, then it can be excluded from earnings for income tax and self-employment tax. So a quick example there, obviously, let's assume that he has an accountable plan of $5,000. So this is our earlier arrangement of the pastor renting a home, except this time we'll deduct that appropriately, that $5,000 of accountable business expenses, lowering the W-2 income to $18,629. with that resulting tax. And then self-employment tax, of course, is less because that $5,000 comes out of the W-2. And the total tax due with that simple arrangement of the $5,000 accountable business expenses appropriately documented and accounted for, the total tax is $71.36, and it was originally about $8,500. So immediately, as you all are aware, you can see the advantage, and your minister colleague client will be very pleased with you in this regard. And there he is in the upper left, by the way. And then with the housing provided, the same calculation, subtracting that, and then we'll see the difference here with the housing provided living in a parsonage. It's now $9,706, and it was $11. So it's a really, really big savings there just with that one item. Now, let's briefly talk about unreimbursed business expenses. Your focus as a tax planner, I think, is largely on trying to get everything in the accountable plan. But there is some tax advantages to unreimbursed business expenses. And the best way I know how to get my head around this is to state the obvious, that the tax code prohibits the deduction of unreimbursed business expenses from tax-free income. In other words, the housing allowance is tax-free income. So logically, if you have business expenses and you're already excluding part of that income, then the portion of the unreimbursed business expenses must be reduced by the amount percentage related to that tax-free income. And there's that statement from the minister's audit technique guide to let us know that they're looking for exactly that. So let's talk about it then, expenses related to W-2 income that are unreimbursed, not a part of an accountable plan. How does it affect income tax on Schedule A? I know what you're saying. Give me a minute. And self-employment tax on Schedule SE. All right, for income tax, the housing allowance is excluded from income. So any deduction claim for unreimbursed expenses must be reduced by the portion attributable to that tax-free housing allowance per the Deason rule. And you see footnote 23 of that court case. Now, of course, given the 2017 Tax Cut and Job Act, unreimbursed employee expenses are gone. But if they come back in 26, this will be affected for unreimbursed business expenses for Schedule A for employee W-2 income. Now, for W-2 employee income with unreimbursed non-accountable business expenses for self-employment tax on Schedule SE, since the housing allowance is included in earnings for self-employment tax, then the unreimbursed business expenses may be deducted in full. Now, I'm going to say a little bit more about this, but I don't go into a lot of detail in this. My other webinar, one of my other webinars that I'll refer to later, goes into much more detail on this with regard to actually preparing the tax return. But I just share some of this with you as a part of the tax planning category, since your emphasis is going to be on accountable plan anyway. Let's talk about unreimbursed and non-accountable business expenses related to ministerial earnings, wedding honoraria, etc., that are paid directly to him. How are those expenses related to those activities for his Schedule C minister business affect income tax and self-employment tax? Well, income tax, of course, is reported for Schedule C. And in that case, since on the income tax side, the housing allowance is excluded, then those expenses must be reduced for Schedule C preparation for income tax purposes. However, for calculating the self-employment tax on Schedule SE, since the housing allowance is already included, then those unreimbursed expenses are fully deductible with regard to Schedule C income. So here's the summary there in number 7 then for unreimbursed business expenses. assist help your, well, number one, help your client get everything into an accountable plan, right? In terms of the church employer portion side of it. And then to make proper documentation to be aware of the filing restrictions with regard to income tax for other Schedule C ministerial earnings. And again, I don't go into a lot of detail here. My other webinar does that. And if you have more questions about that, I encourage you to look at that one, which I'll reference in the end here. All right, so let's just briefly look then the results of your tax planning advice. Pastor John, let's use the example of him living in a parsonage. So you recommend, briefly, that why don't you put $900 more in a personal pension contribution that'll be pre-tax. It'll help your retirement, it'll help your taxes. And then you help him establish that $5,000 accountable plan, which then is not included then in box 1 W-2, for a total of $5,900 in total saved. So living in a parsonage, that original income on W-2 was $35,029. Now it's $29,129, right? On income tax, and for self-employment tax, that becomes $59,129. So this box then shows the planning difference between 24 with the arrangement. So before tax planning is the first column, after tax planning is the second column, and your client will love you with just these two recommendations, saving $2,000 in taxes based on that exceptional tax planning on your part. All right, that concludes business expenses. Now let's talk about retirement expenses. Retirement income quickly. What about retirement gifts? Well, there are court cases that address this, and I'm going to briefly go through this. You can refer this. It has to do with the fact pattern, but indicate that retirement gifts, as long as they're not for compensation, then they're not taxable. That's essentially what this says. And ultimately, you want to do your good research on that to determine that for retirement gifts. Now, what about tax-free housing allowance in retirement? A minister in retirement does benefit from the tax-free housing allowance. And just to mention this, of course, pension income is not earned income. So a minister is also then relieved of any self-employment tax opportunities, obligations on that pension income. So to speak specifically then about the housing allowance, church source retirement income can exclude the housing allowance. And it's usually the trustees of the pension board that sets that housing allowance amount. It's often 100% of compensation, and it's left to the minister and his tax preparer to determine the accurate amount. The key is to make sure that that is received from a church plan. Sometimes ministers will take their church plan money and they'll transfer it to a personal IRA and get their good advisor buddy to handle that. Well, if that IRA is part of that income for them, and the minister wants to exclude parsonage allowance from that, if it's now in a personal IRA, it's no longer in a church plan. So that's why I encourage, don't do that moving unless the money you receive from what you move won't need that exclusion, that perhaps an annuity from the church plan is covering that already, if I make myself clear there. So number 8, ministers advised to avoid rolling over church source pension funds to an IRA, since that rollover will then disqualify the funds as church sourced. There are others that argue about whether that's true, since it really came originally from there. I don't know if I could defend that or not. I'd say keep it in the church plan. And then the tax-free housing allowance in retirement. How about moving to a retirement home? Well, the lump sum up front can't be prorated. So it's only in a year it's actually paid. And Advise your client to make sure that the facility provides a breakdown of costs of housing, medical expenses, and other, because the housing part is only what can be that expense that qualifies for that housing allowance. And then building a retirement home, the construction cost can't be excluded as a housing allowance until the home becomes the minister's primary residence. So as much as possible, get some of that construction cost for the new home in the year the pastor moves in to get that within that housing allowance. Excuse me. So number 9 then is confirm the payment accounting policies of potential retirement facilities. And number 10, consider deferring as many of the construction costs as possible to the time when the minister will occupy the home. Then, of course, qualified charitable distribution. You're required to take that at ages 73 and 73. However, you can, at age 70 and a half, take a qualified charitable distribution, and it comes right off, as you know, off the income, and you don't have to worry about Schedule A deduction for that contribution. So let's take tax year 24, without that charitable distribution, get a standard deduction of $14,600. With that, you get the standard deduction, plus you get the QCD, sorry, that's what that should be. So by doing that, then you would benefit in that regard. Whereas if making a regular contribution, if it happens to be less than the $14,600 standard deduction, then you don't get advantage of that at all. So that's a real help for retirees. So consider then number 11, deferring as many of the construction. Whoops, that's the wrong one. I think we'll catch that up in the next one, but that's obviously the QCD option. And I'm hoping that in the final slide for that one, that's corrected. I apologize for that. All right, final one, category, paying tax on ministerial services. I mentioned earlier about a voluntary arrangement for withholding. The minister does this with his church by filling out the W-4 box line 4A, calculating what the estimated self-employment tax would be and including that on 4A for appropriate withholding. And then that would be withholding that would be reconciled with the amount of tax due as expected. And then number 12, then paying estimated tax quarterly instead of doing a withholding provides the potential for interest income, which I'm sure you've been encouraging your folks as well. So maximize your tax savings. 12 strategies for ministers is the other webinar that I do. And there's the more detailed on the unreimbursed business expenses in that regard. So I'll reference that there. All right, then I won't take time here other than to check, I believe it was number 7, to see if that's correct here. Must have been number 8, sorry. This is exactly what we had before. Sorry, my button is running away with me. So number 8, confirm retirement benefits are church sourced. Number 9, confirm that the payment accounting policies of potential retirement facilities. And number 10, timing of construction costs for retirement home, the QCD for number 11, and then interest earned. So congratulations then on preparing a tax plan for Pastor John. He appreciates your knowledge and your advice on the estimated tax planning and your thoughtful suggestions. You've addressed his goals, which are keep current on tax obligations, minimize income tax, minimize self-employment tax, and take advantage of every opportunity he has. And he's looking forward to his next appointment, bringing all his documents, and he's telling all his clergy friends how good you are. And here's the promised references, bibliography. And now it's time for questions. And I hope that this has been helpful. I see none posted there.
Yeah, I don't think we have any now. Most people are going to be taking this after the fact, so I think you could wrap up.
All right. So if you're viewing this video later, you can provide those questions by simply sending them to me. And let me say a brief word about Clergy Tax Consulting for Tax Professionals. If you have particular questions, I can meet with you on Zoom for 15 minutes, 30 minutes to get that research on those particular questions. We can have a one-on-one Zoom consultation I can research in more detail and provide a written response for you in that regard that you can use for documentation. I also provide a 1-hour seminar that introduces your tax team to these concepts, and also a 3-hour seminar, a complete guide to basic knowledge for ministers and income tax return preparation, as well as tax planning services. And again, there's the other webinar that I refer you to. And thank you very much. And you all have a good day. I hope this has been helpful for you. And thank you, Zach. Go right ahead.
Great. Thank you, everyone. And thank you, Bill. Here's a quick reminder how everyone watching can earn CPE for this webinar.
Today's event has ended. To earn CPE, go to earmark.app or scan the QR code on the screen. Then log in or create your free account. Search for the course by tapping on the magnifying glass icon on the home screen and then entering the name of this event. It takes a few days to make the course, so if you're attending this event live, keep an eye out for an email letting you know when the course is available. Pass the quiz to earn your CPE, then tap the button to email yourself a certificate. Stay tuned for more events from Earmark. Thanks for joining us, and we hope to see you again soon.